Hey everyone, data center has been one of the hottest theme of 2024 and many stocks that directly or indirectly focused on this theme have zoomed exponentially. However, the last few days have sent a shock wave in many data center related stocks of India that have witnessed a sharp correction. In fact, many stocks are locked into lower circuit. For instance, Netweb, that is India's leading high-end computing solution provider, got locked in two back-to-back 10% lower circuit on Monday and Tuesday before it recovered sharply. Then another stock is E2E, which is an AI-focused cloud platform provider that provides advanced cloud GPUs and a comprehensive ecosystem of cloud technologies designed for development and deployment of AI and ML application. Its stock has got locked in back-to-back 5% lower circuit in last few days. Then third company is Anant Raj, that is basically a real estate company, but it is also focused on investing 10,000 crore in building data centers as one key growth driver in the future. The stock price of Anant Raj has brutally tanked more than 30% in last few days before it recovered later. Next company is Blackbox, which is a global IT solution company that provides network and system integration service, technology products and support service to business. They offer service such as your data center build-out, cybersecurity and a digital connectivity infrastructure. Again, it was in consistent lower circuit this week. Similarly, there is a company, Orient Technology, that provide IT infrastructure service to data centers that include your server, storage, network components like switches, routers and so on, which has also hit a consistent 5% lower circuit. And then you have Techno Electric that provides EPC service for power infrastructure sector that is deploying multiple data centers, including data center of 24 megawatt IT load in Chennai by Q3 of FY25, 24 megawatt IT load in Kolkata by FY26, and other data centers in Mumbai and Noida in FY26 and FY28 respectively. Overall, company has a mission to build data centers with a capacity of 250 megawatt in all major tier 1, 2 and 3 cities across India by FY30. Its stock price is down more than 30% in last 1 month. So obviously there is a lot of havoc and everyone is clueless. I mean, a few months ago, data center was one of the hottest and fastest growing category. What just happened that created such sharp correction? So there are actually two reasons. First reason is the introduction of new AI disruptor from China called deepseek. I'm sure by this time you all would be aware of it. It has already created a massive buzz across the globe. The key question is how deepseek has resulted in sharp correction in data center related stocks. To understand that, we first need to understand what deepseek is and how it can revolutionize the global AI industry. And then we'll discuss the impact of deepseek in Indian data center companies. Alright, let's get started. In case you are tracking the latest technology development, you would know that AI is a massive revolution similar to internet in the 90s. Today, every country is trying to build expertise in AI and as usual, the US is leading this AI revolution where ChatGPT has built the foundational model for AI that is smart enough to interact similar to human conversation. In fact, immediately after taking the administration, Mr. Trump has announced the creation of new company called Stargate with a funding up to $500 billion. That is around 42.5 lakh crore rupees to grow artificial intelligence infrastructure in the United States. So you can imagine how important this AI technology for the future. However, please note that AI processing requires very high processors, and that's where Nvidia comes into picture with its GPUs. And that resulted in the exponential rise of Nvidia to become world's second largest company with a market cap of around $3 trillion today. So when everyone was looking at US for AI innovation, meanwhile China quietly launched something called DeepSeek that shocked the world. And once you understand that, you would get the clarity on why data center stocks have fallen so badly. So basically, DeepSeek is a Chinese AI company that has developed a series of large language models called LLMs, including DeepSeek R1, which is their flagship model. And there are multiple reasons why it is gaining popularity. The biggest reason is cost effectiveness. Company claims that DeepSeek R1 was trained for around $6 million, while OpenAI's ChatGPT-4 reportedly cost over $100 million. This cost advantage could be a game changer in the AI industry. Then second reason is deepseek models are designed to operate efficiently on less powerful hardware. This means they can potentially run on less expensive and more readily available chips. DeepSeek's ability to operate efficiently on reduced capability chips challenges the demand projection for advanced, expensive hardware used in traditional data centers. This has led to fears of decreased demand for data center services and infrastructure, and the biggest reason behind the fall in data center related stocks. So I would say this is a COVID-like situation for data center that created huge uncertainty on future growth projections of data center related companies of India. And when such situation arises, the first reaction is huge selling. On top of that, there are lack of buyers to absorb such selling, and that has resulted in lower circuit for many data center related stocks. Today, nobody knows the exact impact of this AI disruption on data center companies. Having said this, there's also a positive side to this development. DeepSeek's models can achieve comparable performance to other leading LLMs like ChatGPT, but at a fraction of cost and with less demanding hardware requirement. This makes AI technology more accessible to a wider range of users, and that could lead to a surge in AI application and use cases across various industries. This could involve integrating AI into more products, services, and processes. And as AI becomes cheaper and more widespread, the overall demand for AI-related resources such as computing power and energy could actually increase significantly even if individual AI models become more efficient. This increased demand could actually offset the efficiency gains of DeepSeek and can potentially lead to higher overall resource consumption. So the point is, this disruption in AI sector is not really bad actually. In fact, there's a term called Jevons paradox for this moment, which means increase in efficiency in resource can actually lead to an increase in consumption of that resource rather than decrease. This happens because increased efficiency makes the resource cheaper or more accessible, leading to wider adoption and ultimately higher overall consumption. Coming back to the reason for correction in data center stocks, first reason as discussed is fear of fall in growth for data center companies, at least in the near term, due to increased efficiency. However, this is not the only reason in my opinion. The second factor behind correction in data center stock is overvaluation. If you observe data center stocks, the correction is not just due to DeepSeek. These stocks already started correcting before that. For instance, Netweb was already down 30% before DeepSeek was announced. E2E was already down around 40% before DeepSeek announcement. Orient Tech was down 20%, Techno Electric was down 38%. So the reason is not just DeepSeek. Let's be honest, data center was the most overhyped theme of 2024. One of the reasons I never discussed this theme, because due to hype, the valuation of data center stock were crazy high. So what happens is, when a particular sector does well, companies report good earning growth and future prospects are also bright. So everyone wants a piece of shareholding in that sector. As a result, the valuations become expensive. On top of that, today we live in the world of social media where both fear and greed gets amplified big time. So when a sector or stock is in upcycle, everyone feels the FOMO and want to buy at any valuation. Likewise, when there's a down cycle, nobody wants to touch the sector or stocks within that sector and valuations becomes very cheap. In case of data center, it was the case of overvaluation. For instance, Netweb had its IPO in July 23 at around 800 level, and within 18 months, its stock price was hitting levels of 3000. That's crazy 3.75 times return within 18 months. Although the growth is also brilliant at 72% CAGR growth in sales in 3 years and 110% CAGR growth in net profit in 3 years. However, due to this hype, Netweb valuation touched peak PE of more than 190. Obviously, that is not sustainable. Now, it is not that the future growth of the company is not bright. In fact, management has guided for 30 to 35% growth in the near future. But you can't pay a PE of 100-200 to a company that is growing at 30-35% rate. Although after two back-to-back lower circuits, Netweb released a statement where it highlighted that rather than threat, they see DeepSeek as an opportunity for the business growth. They shared 3 reasons. First is market expansion. DeepSeek paves the way for inclusive AI adoption, expanding the market further. By lowering the cost barriers associated with advanced technology, it enables a wider range of customers previously hesitant due to high adoption cost. to access and utilize appropriate computing resources. This empowers them to leverage AI effectively for addressing their business challenges, driving greater demand for our solution. Second, Netweb's AI solution portfolio is designed to provide multi-GPU APU platform that caters to both inference and training architecture. The performance acceleration enabled by platforms like DeepSeek will drive greater adoption of our solution. The third and critical important factor is that adoption of platforms like DeepSeek aligns with the interest of local government and enterprises. This will accelerate the development of similar platforms within India. In fact, such disruptions will only hasten India's commitment to advancing its AI initiative and allocating resources towards this transformative technology. This is exactly what I said when I discussed the Jevons paradox. So DeepSeek is not a threat, it's an opportunity for mass adoption of AI technology. After this statement, Netweb share price again jumped, but still the valuations are very high at a PE of 100. Now I remember covering Netweb at levels of around 1100 last year, and then stock has zoomed a lot before correcting recently. Likewise, E2E is one company that has zoomed around 40 times in last 3 years from 120 levels to more than 5000. At the peak, its P ratio touched high of 250. Again, company has been growing exponentially. But the key question is it worth paying such crazy valuation? So high valuation is one of the biggest risks when the stock jumps a lot. One risk of DeepSeek and people book profit. As a result, E2E is consistently hitting lower circuit and now down more than 50% from the highs. Even after correction, the P ratio is now 137. So going forward, everything will boil down to company's growth and what valuation market would like to give to E2E. Then if you look at Orient Technology, it's an IT solution and infra provider, and I've already done a detailed video where I explained that there's nothing extraordinary about their business. There are hundreds of such companies in India. It's just that Orient Tech is growing due to higher demand for IT infra, especially for data centers. So you can't pay a very high valuation to Orient Tech because it's not a highly moated business, and if the demand falls, its growth would also fall. So until there is good demand and upcycle in the industry, earnings can continue to grow at good pace, but you should be very careful and avoid buying at very high valuation. Also, exit would be very important before the down cycle starts in the industry. Similarly, all other companies like Anant Raj, Techno Electric, Black Box commanded high valuation. So this correction is not just due to DeepSeek. It's just one trigger. Another issue was high valuation. So one negative news and people started selling their data center stocks left, right and center. And that's one biggest risk when you buy a very expensive company due to hype. Having said this, let me clarify again. DeepSeek might result in lower requirement for processors, chipsets and computation, but this is one moment in AI that would result in commoditization of this very expensive industry, and AI could actually become part of every sector and industry. So in the long run, this would only result in more and more adoption of AI. Having said this, we have to wait and watch the near-term impact of DeepSeek. But in any case, this event has highlighted one of the biggest risks of investing in overhyped companies at crazy valuation. It's important to identify themes when they are in nascent stage so that you can benefit from the upcycle. But the fact is, unfortunately, majority of retail investors end up investing in a theme or sector where it is already overhyped. We have seen many examples in the past, right from chemical, railway, defense, PSUs, and recently your data center and solar stocks. I'm not saying that you should not invest in these themes. All I'm saying is try to learn how to gauge the valuation before investing in any company. And trust me, it's not that easy. It requires a good few years of experience. So if you are someone who has recently started your investment journey in stock market, I would strongly recommend first learn how to study a business, its valuation and so on, and then invest your money. Do not buy on tips, because in the short term, you may fetch good returns based on tips, but in the long run, it's not sustainable and eventually you might end up losing more money than earning. Let me not stress this video further. Just one update, since we are in Q3 result season, I'm closely tracking more than 200 companies in an Excel sheet along with my commentary. And I discuss them in my weekly video series that also include my own investment strategies. So in case you need some guidance for long-term investing, you can explore my weekly video series. Now tell me in the comments, did you invest in any of the data center related stocks and what is the return you are getting? And do you think this correction is an opportunity to buy data center stocks or there is more downside ahead? I'll see you next video. Till then, take care.